Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is my good friend Greg Foss. He is an executive director at Validus Power Corp, and he also has decades of experience in high yield credit trading as a portfolio manager. Welcome back, sir.
I love to be here, and I need an announcement. I'm changing positions, so I've
Oh, really?
just So that intro we can addend in or whatever if you want to start again. But here's the truth: I'm joining a fund out of Florida as chief strategy officer in the hard money space. Okay,
Nice.
so Validus, I'm still a shareholder, but I have no formal position there. Validus, 3 years, power company, going through some difficulties right now, but let's just say that the assets are good. Anyway, happy to be back, Ivan. It's a
Yes.
pleasure to be here.
Super grateful to have you on. And you are a hard money advocate, so that's why I had to bring you down here again and talk about everything that's going on in the markets. So even Powell, just a few weeks ago, he raised rates again, and the interest rates has been raised by 2.25 basis points. What's happening in the markets, Greg? What's worrying you right now?
Okay, so let's be sure we're clear on the terminology. It was 25 basis points
Yeah, that's right.
or 0.25%, right? 100 basis points in every percentage point.
Right.
I'm a bond guy. That's very critical to me because basis points matter. Ivan, basis points matter. They are the pricing mechanism of the overall bond market. What's concerning me? Very simply, the US debt downgrade is very real. Do not listen to Chamath. Do real math. Don't listen to Chamath, who thinks it's not a big deal. Listen to someone who's been in financial markets for 35 years. Not that he hasn't been involved. He's just never traded bonds, okay? A debt downgrade is a very serious event, and it's the trend that matters, not just the rating action. Okay, second thing that concerns me, bank debt downgrades. Their banks are suffering mark-to-market losses on their bond portfolio, and Moody's is waking up. Okay, so Fitch downgraded. There's 3 major credit ratings in the USA: S&P, Moody's, and Fitch.
Right.
S&P has had the USA rated AA plus for 10 years. Fitch just moved the USA from AAA, which is the highest gilt-edge credit rating possible. They moved it down 1 notch only. It's a de minimis move. It's more message rather than the downgrade. In reality, the USA should be rated BBB at best, okay, which is far, far down the credit spectrum. But here, stick with me. Now that S&P and Fitch have let the USA rated less than AAA, there's only one rating agency that has it left at AAA, and that's Moody's. The funny thing is, there's plenty of buyers in the world that need to have debt rated AAA by 2 or more rating agencies. If there's only one rating agency that maintains the USA at AAA, you lose buyers, okay? Just the way the credit markets work. Not a lot of buyers, but they could be very sizable buyers, okay? Right. Second thing, as I mentioned, it's the momentum downwards. The USA debt spiral is brutal. I probably talked about this on your show. It's growing at $5 billion per day. Is what the US debt situation per day, which means by the year 2033, the USA will have a debt of over 50 trillion. Right now, it's only at 32 trillion. Stick with me here. 50 trillion will be twice the size, approximately, of the GDP. Doesn't matter. It's already too large, and the debt spiral is assured because the interest expense cannot get paid by the revenues after you subtract out entitlements and military spending, which means the debt is growing organically without even considering the fiscal deficits that they're running each year, which is about 8% of GDP. So the US debt spiral is assured. What else is concerning me? They should actually be rated BBB, not AA plus, but that would send the world so crazy it's not funny. Third thing, Moody's, which still has S&P at the gilt edge highest credit, excuse me, as the USA at the AAA gilt edge rating, they're
Right.
starting to downgrade the banks. And they're downgrading the banks because of the commercial real estate exposure of regional banks, as well as the bond portfolio, mark to market losses on the bond portfolio. So, the credit guy, Ivan, I always look to credit for the warning signals. The agencies are always late and $1 short. Okay, a day late and $1 short. They're finally getting this. But what this does is limits the number of buyers that can buy this debt. When you've limited the number of buyers, the price or the coupon you have to pay increases,
Right.
even if it's just a small amount, and it changes market dynamics. So be very careful out there. Always look at credit before you look at equities. The equity guys frequently are whistling past the graveyard when it's the debt guys who know what's going on.
Yeah, no, I just seen that article a few days ago about them downgrading those 10 banks in America, and
Attaboy.
they said there's more coming. So it's not just
Oh,
these first 10. So what happens when it spirals and there's like 20, 30 banks that are
well,
downgraded? What happens there?
well, that is the contagion impact.
Right,
It's a
right.
contagion impact. So are you allowed to swear on your show? I'm going to
Yeah,
swear
yeah,
anyway.
go
And okay,
ahead.
shit flows downhill. Okay, shit flows downhill.
Right.
And don't forget that debt is a prior claim in the capital structure than the equity. So the debt gets downgraded. There's a contagion impact down to the equity because some of the debt guys go, wow, this is a more risky company. I own the bonds of a more risky company. How can I hedge that, Ivan? Oh, I'll go out and short some of the common. Why? Because unless the debt's worth 100 cents on the dollar, the equity's worth zero. Now,
Wow.
this isn't a huge trade called capital structure arbitrage within the bank stock community until it gets really low, like single B rated type of stuff. High yield. This is where I spent my life, in junk bonds and high yield. Any bank that has a non-investment grade rating, which is a pejorative, but any bank rated below triple B, which is middle of the pack, they have big problems funding themselves. When they have big problems funding themselves, bank run happens. When a bank run happens, well, we've seen it. They need to get acquired by a bigger, stronger bank.
Wow.
So all of these things, shit flows downhill, equities get beaten up, the bank has to run around. So there was a merger in the United States. It flew under everybody's radar. Bank of California bought PacWest, right? Did you see that?
Yeah, I
That
see
was
that.
what's called a take under. They actually bought the bank for a lower price than the bank stock was trading at. Hey, that's a great takeover, isn't it? No, it's
Yeah.
not a takeover, it's a take under. The equity
Interesting.
guys got screwed because the bank needed a bigger capital base to come in. So I foresee more of these things happening. Always look at credit. I know you like to keep your things short and sweet, but always look at credit,
Yeah.
people. The equity guys always believe trees grow to the moon. Guess
Yeah.
what? Trees don't grow to the moon, people.
Yeah, no, it's absolutely true. And yeah, you're a bank guy and you're a bond guy, so you know this in and out, and you've dealt with this in your past. What happens? Like, I know that the contagion will spread and that there'll be bank runs, but do you think the future of United States banks is in real jeopardy when you have all of these banks having contagion spread, their credits being downgraded, and then what happens when, like, in the United States in the next 5, 10 years, when you have all these massive banks swallowing up all these regional banks? Is it just going to be like 3, 4 big banks that own all the regional banks
Probably
in the
not
US?
3 or 4. We live in Canada. I'm not sure if I'm doxing you, but
No, it's
I live
okay.
in Canada. We only have 6 nationwide banks.
Yeah,
When
that's
I
what I
went to
mean.
school in the US, so 6 nationwide banks in Canada, and that model works pretty well in Canada. When I went to school in the US in the 1980s, do you know there were 15,000 banks in the USA?
Yeah.
15,000.
Yeah, that's insane.
It's because of interstate banking regulations and everything like that. Now there's still over 5,000 banks in the USA.
I was
Well, what is to
10,000
say,
gone.
in the last 30 years, there's been consolidation of 10,000 banks,
That's nuts.
primarily being bought by the bigger banks, but some of them had to close. Point is, we're still at 5,000. Where's it going? It's going lower in terms of numbers, which means the bigger banks are going to get bigger. But where will it settle out? I don't know. Canada usually uses the rule of 10 in the United States, 10 times the population in the USA, 10 times the GDP. Our banking system has, call it 10 banks. Does that mean the USA should have 100 banks? Probably not, but certainly less than 500 would be my estimation of where it settles out in the USA. What happens? How do we get there? Bank closures. Bank equity stocks get zeroed. Take unders. Bank equity stocks get taken over, but the price is less than the trading price that the bank stock was trading at. And most importantly, too big to fail banks like JP Morgan, there's no way the USA will ever let JP Morgan fail.
Right.
Okay. Why? Well, they have to backstop JP Morgan. It's too big a systemically important financial institution. Credit Suisse, I predicted Credit Suisse would fail about a year and a half prior to Credit Suisse failing.
Wow.
It eventually did, but it failed by forced government intervention. UBS was forced essentially to buy its partner. All of this is to say, banks are the fiat Ponzi transfer mechanism. That's how the fiat Ponzi works. So they need to defend the banking system. They will defend the banking system by printing more money. Quantitative easing infinity is absolutely 100% assured because of the debt spiral that I just talked about, the organic growth of the debt. It's even more assured because now they're going to have to bail out the banking system as well. Okay, so own hard assets. My favorite hard asset, I got to get this in. You can zero me out if you want. Bitcoin, Bitcoin, Bitcoin. But I own silver. I own gold. I own real estate. What I don't own is bonds. Bonds are a soft asset, okay? It's a fiat contract that is programmed to debase because of the currency being programmed to debase. Right. Yes, as Chamath says, they'll always be able to print money to pay back their debts until people don't accept that money. And they says it'll never happen in the USA. And I say, well, they probably said the same thing about Argentina, but it's happened 4 times. They said the same thing about Venezuela. They started throwing that money into the streets because it had no value. Oh, and by the way, global reserve currencies frequently fail. So
every 200 years, what is it, the average?
Who knows? But all I will say is never say never. I don't want the USA to fail. And by the way, as a good Canadian, just going to warn us Canadians, the Canadian dollar will fail 10 years before the US fails.
You told me that before.
Okay, so there we are. That's the thesis. Own hard assets. Don't hope that the US dollar fails, but it will someday, probably not in my lifetime, but protect yourself over it.
It could take 40, 50, 60 years. It could be the next 10 years. Something could click it off, but like
just
you're right.
Know that it's mathematics. It's pure mathematics that it will fail.
And you're right. Eventually, it will fail, but they'll fight tooth and nail. I'm sure they're the bank.
They have to.
They'll fight.
It's the system that keeps them in power.
Right. Yeah, they'll never.
So they have to keep the fiat Ponzi mechanism working. They have to keep those closest to the money printer. Are those the ones that benefit the most? Those are the ones that will ensure that the money printer keeps printing to keep the fiat Ponzi going.
Yeah, they got to keep it going somehow. They can't just
stop.
Yeah. Well, I appreciate you so much, Greg, for coming down. It's always a huge pleasure. And then hopefully in the future, as the market develops, I'd love to have you back down.
Buddy, this is probably our 3rd time doing it. So keep asking me. I'm a huge fan of your content.
Thank you.
I want silver guys to own Bitcoin. Here's what the clearest thing. Do not sell your silver to buy Bitcoin unless you're 100% in silver. Okay, then you're going to have to sell a little bit. But if you own any soft asset, which includes some soft equities. Equities are a quasi-hard asset. There's lots of soft equities assets. You sell those things before you sell other hard assets to own Bitcoin.
Like sell bonds before you sell any silver.
Sell bonds 100%, okay? I am a huge fan of other hard assets, real estate, gold, silver. I've mentioned that to you.
Yeah.
Some people are well protected, but most people in this world have no clue what is coming.
Yeah, they have no idea.
So be careful. Own hard assets, hug your kids, go Canada, but we are in trouble in Canada. Okay, so
Yeah,
don't hope for the
absolutely.
demise of the United States before you look at what's happening in Canada. And I don't want it to happen to Canada either.
Yeah,
So
absolutely, absolutely.
smarten up, people.
Yeah, thank you so much, Greg. Would love to have you on soon.